Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. I tell you, it was another crazy week that we saw within the market trade. Obviously, a lot of ups and downs, some roller coaster feels, and a lot of outside market influences as well. And I learned a new phrase today that I can't wait to talk more about, and that's a short crop, long tail. We'll take a look at that, happenings in the livestock, and a whole lot more on this week's report.
Imagine a future fueled by soy-based possibilities. A future where creativity and productivity live together under one roof. A future that takes you from point A to point B to point Z, all while ensuring brighter tomorrows for our next generation. A soy-based future? It's already here.
And welcome back once again. You can see joining me is Kyle Bumsted. Kyle, of course, with Allendale and Alan Brugler is joining us for the first time. He's with Brugler Marketing Management. And gentlemen, welcome both of you to the show. And the fact that we have had a market that's been dealing with a roller coaster feel, I wanted to start out with kind of what's been happening in the livestock for a change. And wanted to start out with these hogs, of course, a big animal that utilizes our soybean market as well. But it's had an interesting roller coaster type of ride. And I think, I guess, Kyle, the computer put you up first. I saw you tweeting about April hogs were higher for the week. Let's get your thoughts on that.
Well, that's right. From a technical standpoint, we were able to eke out a slightly higher close. I think we're up about 50 cents for the week on April hogs on the weekly chart. Now, the daily action didn't look just the best here, but like we were talking earlier, the cutouts need to find a bottom here, and the cash market needs to find a bottom. The last couple of days, the cash market has been slightly higher, but we haven't been able to really build off that. The futures are oversold. From a technical standpoint, we could see some non-commercial money come back in here if we could find some outside factors to help us influence, like the cutout and the cash side.
Alan, what's it going to take waiting for this hog market to see the cash movement to give it some more positivity?
Well, again, if you're going back to the cutouts, the pork bellies, which is the raw material for bacon, is our main problem. They've been weighing on the cutout values. The hams haven't been the greatest, and we're not talking Easter hams there. We're just talking the ham primal, and a lot of that goes into the export market. So I think you start to see those turn around, then you're in better shape. Seasonality suggests that the cutouts would start to go up here from now into April, and then eventually to a peak in June or July or August. But we're contra-seasonal at the moment. It's been leaking a little lower. I think the biggest concern is the economic situation. If we're really slowing down the economy and consumers have seen negative real income for, I think it's 21 months in a row, they may be cutting back on their meat purchases just a little. We haven't seen that in cattle or in the beef sector, but it's always a concern.
Well, we know export-wise, Mexico has been the hot market for taking U.S. pork.
Yeah, that's definitely the case. That's still the case. There's some trade friction going on there relative to corn, and specifically non-GMO corn. But yeah, we're still selling quite a bit of meat to them.
Kyle, I want you to kind of look out your back door because, as many of our viewers and listeners know, you have cattle. You understand the ups and flows that have been happening with this market, and wanted to talk with both of you guys about what's been happening with this heifer trade. But for you right now, what are you seeing as the push in the country to get these animals to market if we're waiting till the end of the week for any sort of cash buy?
Yeah, I appreciate you mentioning that, Susan, because I just checked here right before about 1:30 this afternoon. We had some cash develop in the Southern Plains here, and it's kind of been a standoff all week. Packers in the Southern Plains have been bidding 154, and the yard's been holding out for 157, and 156 has traded here about 1:30 this afternoon on a sizable amount of cattle there in the Southern Plains there in Kansas. So a lot of 153, 155 here in Nebraska. Of course, the northern cattle were carrying some mud, and I think that's kind of dragging on a little bit. A lot more cattle been sold on a dress basis here this last week here for that fact. But looking here at the technical side of things here, we're looking okay. We went down to some major support, major uptrend lines. That looks good. And as far as the box beef goes, I still think there's some more downside coming here. We have seen, obviously, with that cold storage report there, hitting on both the pork and the beef. The beef main thing is we did see a build in stocks, and I have heard people saying that they've been buying ahead because of this hole that we're going to have in the cattle complex coming up here as far as marketings. But I don't know if I can really hang my hat on that because we just keep adding to the pile. Why would we be pre-buying it and then just adding to the pile? I don't know if the beef is really moving out of the freezers like we think it is.
So, having said that, do you have any concerns of just seeing a backlog happening in these freezers if consumers aren't buying?
I can see that potentially developing here. And when you start to talk about movement here in cattle, I know talking to some guys here that have moved cattle to sale barns this week, when you ask about heifer retention, then they say, what heifer retention? We're not retaining any heifers right now. We're not there yet. We're sitting here under, 14 inches of snow right now, cold weather, sub-zero weather coming in here. We could have a lot of winter yet until the 15th of June. And they're looking at their hay, they're looking at their feed supplies, their hay, and they're saying, I don't think I can manage some more cattle around here at this point in time. So they're hitting the truck. So I don't think that we've slowed down the heifer placement in the feed yards and started to retain them for the breeding herd quite yet.
Alan, I see you shaking your head in agreement with what Kyle's saying on these heifer retentions.
Yeah, that's the number one thing we're looking for as far as changes in the cattle cycle. We're in liquidation phase. We sold and processed a huge number of beef cows last year. The heifers have been going in the feedlot, basically propping up the feedlot supplies. Steer numbers are already down because we have been liquidating cows for the last couple of years. Well, yeah, what we're looking for the change would be that cow calf guy saying, "Hey, the grass looks good, and I want to keep some of these heifers back." When that happens, then you really tighten up the feeder supply. The board's already anticipating that. If you look, there's a huge premium for the fall feeder contracts versus the nearby. We're already anticipating steers are going to be kind of tight next fall, but we really don't have that retention yet. To the degree that we keep putting that off, we've got a few more cattle coming into the feedlots than we would otherwise. Once that happens, then you'll see a probably one more swing up in the feeder cattle prices, and then a sort of a delayed reaction with fewer numbers on feed in the fat cattle, assuming the economy will let us charge that much for the beef.
Well, as we continue here at the Nebraska Soybean Board Weekly Market Roundup, Kyle, for you, as we look at these happenings, feedstuff wise, are you concerned about prices of grain to be able to feed these cattle if they have to switch to some other source of protein?
I'm a little bit concerned here. I mean, the cost of gain on these cattle with this cold weather up here in the northern plains, whether it's hay or corn, it's not cheap, and they are losing some efficiency, especially ever since Christmas. These cattle have just been barely hanging on, if you will. They kind of lost it, and they've gone backwards, so to speak. So we have seen that been reflected here recently in the weights. And with cost of gain, some of these cattle up here, when this thing really does start thawing out, get them out of here. We're tired of fighting the mud. We're tired of fighting it just between the cost of gain and fighting the mud and everything else. Just get them out of here, get them gone. So that's something I'm really kind of looking at here. And when you look at the futures and you look at the spreads, they've anticipated, these shorter numbers coming out there. But, if you're a hedger, you can look at that premium out there in the April board and say, boy, if I'm hedged here in February, I could almost roll those out and maybe carry these cattle for another 30 days here against this April board and pick up $4, and that can help offset some of that cost of gain potentially.
Alan, I wanted to ask you about saying that you and I had a discussion with on a Friday afternoon. It was a short crop, long tail, kind of a unique saying that's got some great punch to it.
Yeah, it's an old trade axiom. Essentially, what it means is the short crop would be typically is a crop problem. It's a drought or some kind of tightening of the supply. We get a price run up. You can go back and say 1980, 1983, 1995, 96, 2008, 2012. Those are all short crop years where we had big price spikes. The 2022 was the most recent iteration. But what typically happens in those is you ration demand. You cause some users to quit using corn or soybeans. They go to substitutes, or they just cut back on overall consumption. Exports tend to take a hit because they're the most elastic of the demand components. Then you are also sending the signal to grow more corn, more beans, more wheat, whatever it is that's short. So after the fact, after that short crop peak, then you get a surplus supply situation. And the long tail part of that saying is that it typically, once you go into surplus, it takes 2, 3, 4 years in the grains to work it off, to get the supply and demand back into balance. So the short crop run up is typically fairly, 12 to 15 months to get to the peak, and then 3 or 4 years sometimes to get that all balanced back out so you can have another rally. So what I've been telling people is we're in that situation. We've had the short crop. We're not necessarily into the long tail yet, but we're fighting gravity here. The markets are mean reverting. That's another saying. They tend to go back towards the average price over time. We can stay up here, but because we're fighting gravity, we need some fuel for the rocket, and that could be weather this spring. It could be a USDA acreage surprise on March 31st. Grain stocks are tighter than expected. There's things that could provide that fuel. But if we don't get it, over time we're probably going to drift lower because we've already had our big run up.
Kyle, do you have any concerns when it comes to, since we're talking soybeans real quick here on the soybean report, South America's got early harvest underway, but the pressure is still going to be there, and countries are going to go to them before they go to the U.S.
Well, that's right. They will, because they've got the fresh supply and they've got the freshest beans in the world. So, yeah, they're going to go right there to South America. Now, I'm not quite sure that the trades has factored in that Argentina is going to have such a big crop, because if you look at the inversions we're seeing in soybean meal and the inversions we're seeing in old crop soybeans, obviously with all the talk of the rain we had in South America last week, the market took off and ran, and the bull spreads really went to work this week, as well as the cash basis. So there still is an underlying current of demand here with that South American crop maybe still in the balance.
All right, it'll be interesting to see where we see progress happen into next week's program. Gentlemen, thank you both for joining us this week.
My pleasure.
All right, just reminding folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. As we wrap up another trade week, and already hard to believe February around the corner, this is the Nebraska Soybean Board Weekly Market Roundup.